There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We're going to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Futures are green with Europe leading the way overnight. The second quarter gets underway as traders try to determine the best course of action. Can this rally continue? I'm Brittany Umar and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer. I always have that problem on Tuesday of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning after stocks got up to a slow start on the first trading day of the second quarter of 2013, which, Scott, could that be an indication that more mixed action will be ahead?
I think traders right now are getting a little weary of all this mixed action because some things that we're used to, which is like high beta tech, leading the way, financials, strong, are not happening, but we continue higher. So I think traders are just trying to do a little less, and there's some shorts that are rewarding traders and some longs. You just have to be very stock specific right now.
Right. So as we're seeing futures up this morning, what will be the levels you're paying attention to in the S&P?
Well, yesterday we were looking at support. Today you have to see, resistance. And if you look here, you'll see that here's a chart of the S&P. This is that November low. Here's that nice gradual trend that's not even been tested. Then you have a bit of an accelerated trend that's now developing that hasn't been tested. So yesterday, we traded a little bit below Thursday's low of 1561, but then we held the 8-day and we pretty much closed a little bit off the lows. And now if you look at resistance, we're opening near 1570. If we break above 1570 today, we're going to test that 1576 high that happened many years ago.
So it seems like longs and shorts are working in this environment. There's money to be made on both ends.
Yeah, just have to pick and choose your spot. Just don't short the strongest names and don't try and buy bottoms, which is like the reversal that people like to do. And if you look at yesterday in the market, there were some other signs that we were weakening a bit. If you look at the Russell IYT, which helped lead us up, not a drastic day, but pretty big engulfing day. Took out all of Thursday, which the S&P didn't. So it's just something to watch. And then you have this accelerated trend line here that if this breaks, perhaps you see a bit more corrective activity, which I think is welcome. And then you look at the Russell. Okay, the Russell also, which is where the growth is, which is where traders like to see lead a move, it engulfed this entire upper range, closed below the 21-day. So I think, this opening up a little bit with the futures, if this goes red today and breaks below yesterday's low, I do think that, it could see the 50-day, and that's somewhere maybe you want to look to short just in case versus things that are still hanging in there.
Well, so because there's clearly money to be made, both long and short in this market, we're going to take a look at both sides of the spectrum. Let's start and turn the spotlight on the shorts, starting with some potential short setups that we have right now, including Whole Foods, which looks like it's technically breaking down.
Yes, I don't know why, but who cares why? The chart right now is showing weakness. And if you look at the chart and you see the last time it gapped lower, according to our swing trading rules, once you gap down, and if you do not fill that gap, it shows weakness because no one's buying it. It's not on sale. Let me get my trusty little line here. So here is your gap down. Here is this lower level that couldn't go to the upside to fill this gap, meaning they didn't want the stock on sale. So here you go with big support here. If it were to break below yesterday's low, below this 85-ish area, I do think you see more downside. It's below the 200-day, it's below all the moving averages, and it looks to me as it's vulnerable. You're looking for something to short. This to me is a nice candidate for you.
Well, we know that the banks led the rally earlier in the year, but they have been lagging, and there's some potential short setups there, including Morgan Stanley, which have been a laggard in this sector.
Yep, and this one, every time the market looked like it was going to broaden out, I'm like, why is Morgan Stanley not joining the rally? So I would try and buy it, and it wouldn't work. So rightly so, with the weakness in the banks, this one has been going lower the fastest. So if you look here at the chart, you will see, first little telltale was when you had this ascending channel here that broke to the downside, but it held this gap. Okay, then it tried to rally. Remember this day it was strong and then trapped a lot of longs, including me that day. And now look where you are. Okay, we're at this gap. Yesterday it started to go into it a bit. So if this group wants to weaken a little bit more, this is something you should go after from the short side. Perhaps it comes and tries to test this gradual trend line, and it comes somewhere into the low 20s, and at that given point, maybe it'll be a buy. But for right now, it does look somewhat weaker.
And Goldman Sachs had been showing weakness, especially in light of all of the Cyprus news. It's more tied to the European debt crisis. We talked yesterday about how it had been looking a little bit better, but it still had trouble finding momentum above its 8-day yesterday. So where could we see more selling?
Well, I think that's a key pivot now. It's not a given short. Some guys have been making money shorted as it went below the 50-day, and now it's trying to hold another level. So this could hold some keys to market movement. If you look here at Goldman, you will see that this was that ascending trend that broke, which was a decent initial short. And then right here is where I think some traders focused on and made a little bit more money when it broke this 150.50, if you remember. Then it went below the 50-day. Now it's been hovering below. I think this is pretty big support here. This is 144.60. If you want to be long, you could be long versus this area to see if it bounces back and reclaims the moving averages. But if it starts to take out this 146, you better be careful, because guys will be looking to short this level, and if it closes below, you could see more downside. Just the question is, where does it go? And here's the 200-day all the way down here. Perhaps it gets to somewhere closer to 140.
And then over in tech, BIDU is still looking weak. I know you haven't been a fan of talking about this stock from a long point of view, but now there's actually potentially money to be made if you actually go short.
Yeah, it's one of the weakest high beta names, and we talked about after earnings how it was set up where you had the gap down, and if nobody wants to buy a gap down or it on sale, that means it should go lower. And if you look here at BIDU, which it's still broken, you will see that here is your gap down after the numbers. It had to consolidate that gap down. No one said that, oh, now it's on sale, because from 107 down below 100, no one was a buyer in here because of the gap down. So with that said, you had more follow through sell side. So I would say it's at a somewhat of an inflection point right here. Okay, where to me, it's not a blaring short. If it were to take out this 88.39, perhaps it retraces to the upside and you see the 50-day. But if it starts to break below this lower level pivot, maybe below I'd say 85, it can get in motion to the downside. So I'd say watch this right now for a move, jump on the upside if it goes above this, or the downside. Right now it's not sure, but right now also the trend has been lower, so the probabilities say lower.
All right, and coming up, we're going to go on the flip side and go in the trenches with stocks that could be potential long plays. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back, and now we're making a case for the bulls. There are laggard names out there with heavy short interest that are actually picking up momentum and could be plays for the bulls. And now when I say plays, I mean trades, not necessarily long-term investments.
Yeah, because some of these stocks have been broken, and they've been broken for a long time, and then when they're heavily shorted and they get tight patterns, they ignite. So you want to look for these patterns, because these patterns could mean cash flow. So like the first name we're going to look at, we'll look at GME. Okay, at this point, unfortunately, you guys were talking about this the past few days, but I just want to show you how something could move if it ignites. So if you look here at GME, you'll see very tight pattern here. And what did it do? It exploded above this, 26.67. And even yesterday, people were like, okay, if it gets above that high of Thursday, which was 28.67, it can go again. So here's a nice 2-day trade, in a name that's heavily shorted, and it produced some cash flow. If you go look back, everyone's like, well, it's a broken stock. It's a broken stock. At this point, it actually looks pretty good. It took out this peak, and at this point, I would say if you want to look for a continuation here, you want to see it hold 28. Perhaps put in another flag type pattern, and then look for continuation. But these type of trades are working right now in these heavily shorted names.
Yes, and Tesla Motors is one of them. Tesla Motors is a heavily is a short interest.
Can't
get that one out.
A stock that has a lot of short interest.
There you go. But the stock was a big mover on Monday after news that the company said it expects to post its first ever quarterly profit on better than expected sales. And the stock actually posted nearly a 16% gain. It did close off its highs, but could we see continuation today?
Well, one of my rules is if you have a huge gap up, you want to see if that gap up gets protected, because that means shorts are trapped and maybe you have continuation. So if you look at Tesla, guys did make some money there yesterday, but there could be more money to be made. Look at the size of this base from, I guess, coming public. And here's your big gap up, and you could trade long versus this 43.93. So the longer it holds above this level and goes sideways, the higher the probability it could potentially take out yesterday's high for continuation. So I think it's going to need time to absorb this huge move. But if it could hold this gap and go sideways for a day or so or a few, the next entry will be right around there. But just keep this one on the radar, because as obviously you see, it could move when it wants to.
Right. And Green Mountain Coffee, that has a decent amount of short interest, but has been on the move, trading above its 8-day and above all rising key moving averages.
Yeah, this one I think that people are excited, but now is not the time. It already had its big move.
Okay.
If you look at GMCR, you'll see that this is when it started to ignite, when it started to get back above this 49.71-ish area yesterday. Tried to go again and had a doji. At this point, just to show you gaps, okay, just so you can learn here, look at this gap up right here. Okay, this gap up did not get filled, so it showed pent-up momentum, and then from this gap up, look at what it led to. Okay, so that's why pro gaps are important to identify, because usually it traps the shorts and leads to a bigger move to the upside. At this point, I would trim and trail up here. I wouldn't be looking to add.
Now, what about Barnes & Noble, which has been trading in a range, and now all focus is going to be on seeing if it can push to the top of it?
Yes, this one I think there's a setup. Okay, sometimes there's a setup and you put it on your A list, so to speak. And if you look here, you look at the chart, you'll see this is a very big level going all the way back from like a year ago, right? This is when it peaked, came up, didn't get through it here, didn't get it through it here, didn't get it through it here. So now, as it holds higher, it could try again. So at this particular point, as long as it stays in this upper range, the higher the probability comes into play that it could take this out and give you a really nice move. So at this point, the buy area would be on heavy volume if it gets above 1725 to 1750 and closes above it. Put this one on your radar.
All right, time for some quick hits. Everybody's talking about Goldman Sachs taking Apple off its conviction buy list. What are your thoughts on that?
My thoughts are, I guess somebody might have known, considering it was down 13 points yesterday. But the overall story here is, like, a lot of people are so upset. They're like, traders have ruined this stock. You know what? Traders haven't ruined the stock because we don't control the market. We just kind of ride it both ways. And ever since Apple broke, remember that 680 way back when? It's been trapped in a downtrend, proving that there's been no commitment except for some tradable bounces. So when that takes place, it becomes a trade. Okay, and until it proves itself to be an investment again, don't commit your capital and don't just say it's Apple, I'm going to stay there. If you look at Apple right now, you'll see that this is when it broke that 681. We talked about it becoming a trading vehicle then, when it ruined this trend of following the 21-day. And if you did that there, you had no idea that this was going to take place. But every time it tried to bounce, it failed. Here was a nice tradable bounce, but then if you remember, it broke this zone where it had no commitment up here, so you should have sold it or maybe got short. Then it tried it again here. Remember this little movement to start 2013? It should have held this area. It didn't. And then now go to the last tradable move. We talked about it breaking above 440. Gave us a nice trade right here. Gave you an additional trade when it broke above the 50-day, above that 457-ish. But then it peaked out, and if it wanted to stay and show commitment, it should never have broken back below the 50-day around this 457. And now look where we are. So at this particular point, it's up $1 or so, or maybe $2 on this downgrade because it's a bit oversold. Here's your pivot. 427.74. At this point, just continue to trade it, and then you have that lower level, a low, which if it takes out 419 in the coming sessions, it could go a lot lower. So for me, level versus level, sometimes you could hold it for multi-days, sometimes just a few minutes. But at this point, if you're just holding it and you're going underwater saying they're going to be innovative, they're going to do something different, they're going to announce a buyback, all these things, then you're being, you have a little risk on the table. You're better off doing a call spread or something like that. So at least your risk is premium paid versus trying to pick a bottom because the stock has shown no commitment. So when it does, maybe we could hold it for longer, but at this particular point, it's still just a trade.
All right, and big multinational companies like Procter & Gamble still working in this environment. We mentioned it on Thursday's morning call with a potential breakout at 77.82. Is that still the level to watch?
Yep, take a quick look at the chart. You'll see high-level flag or high-level consolidation. It breaks above this 77 and change. It can continue.
And IBM had a nice bounce off its 21-day. Where might the next breakout be?
IBM, if it can get above, what's this level here, 213.44, perhaps it can continue, but make sure it holds a 21-day.
And McDonald's had been on the radar for a breakout around 99.70. What are you watching now?
This one, big mover. This is why the S&P is up, because names like this have been strong. It's trying to hold higher. You look here, it's still holding the 21-day moving average, still holding this gap. So the longer it does that, the higher the probability that it can make new highs. And that pivot area is right here around 99.78.
And United Health was highlighted last week as a healthcare play that looked like it still had room to run. What are the key levels you're watching here?
Wow. You look at this chart, it looks like a name that I used to trade. I got to start trading these a little bit more. Look at this UNH. Damn, somebody moved my cheese and they moved it over to UNH, and here it is. Boom. Nice igniting bar, another follow through this level. And at this point, I don't think you chase a stock that's up $5, but it still looks like it has higher prices in its future.
And finally, Open Table holding on to gains. Where might we get some continuation?
Above yesterday's high. This has been on the move. Guys have been pointing it out, and this has been in a nice trend. You look here at Open, and there are definitely people still going out to restaurants. Maybe the economy is getting better, and if it goes through this little point right here, you'll see some more momentum. This was the more of a core trade right here when it broke above this 56, and now you're looking for continuation. There's that action area.
All right, so what will you be focusing on heading into trading today?
I want to see if the S&P could take out 1570 and close above it. And I'm also going to be focusing on the Russell and the transports where they were really weak yesterday. If they show some relative weakness, maybe I'll go for a cute short there. And just take it easy. I'm going to let the market come to me. We're in a new quarter. There's no need to push it. This is the time to figure out the complexion, measure the speed, see what's going on. And at this point, I'm in no rush to do that much. But there is action, and if you let it come to you, as you've seen, there are shorts and there are longs. Just pick and choose your battle.
All right, that's your morning call for this Tuesday. Happy trading, everyone. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.